Now, first of all, I want everyone to look at TBLT's chart from yesterday. So go to TBLT's pre-market chart. I'll give you all a moment. You notice at 9 a.m., it's a nice little candle there. Interesting little gigantic 1 minute candle to the downside. Dropped from $8 a share all the way down to $5.60. It's a staggeringly, it's a massive red candle. And what happened? So when you see this a lot, stocks that have been up multiple times, several green days in a row, especially stocks that are beaten down so much. For example, TBLT, 6 months ago was worth $81. Now it was at a low of worth $1.30. So in order to kind of plug the holes of a sinking ship, if you will, if TBLT or a company receives good news and it's a multi-day runner, you see this with multi-day runners. The first or second green day, they'll put in some paperwork for what's called a secondary offering. Really important to know what these are when it comes to trading. So what are they? So the reason they're called secondary offerings is because all stocks have a first primary offering. It's called the initial public offering. This is when the company openly sells stock to the open market in order to go public, to be publicly traded, where investors can scoop up shares, if you will. And what happens on these momentum stocks is after they run a series amount of days, the company wants to raise money, just like they did on the initial public offering. They raised a lot of money because they sold some of their company to the open market. So the initial public offering, like I said, all stocks do, very common. Every stock we've traded had one. And the secondary offering it does it for a second time. What I mean by that is a stock that's up series percent, in order to kind of plug holes or to raise capital, what these companies do is they come out with a secondary offering and they sell more shares to the open market. So what does that do? It dilutes the float. The float is the amount of shares that's available for the retail investors to buy, for me to buy, for you to buy. And what you can imagine is they push shares out to the open market. They create more supply. If the demand's not there, what happens to price? Plummets, just like we saw, from 8 down to 6. And I know a trader who literally sold the candle before. And what happened after that candle wicked down? 2 minutes later, news of an offering, secondary offering. So, like I said, companies do this to raise capital when their stock is at a higher price than what they should have, and it raises money. Now, I don't know what the book value of the. Let me see if I could find the offering. Okay, so it's a $20 million private placement. Let me try to find it here. Probably should have had it pulled up for y'all. But they sold $200 million worth of stock into the open market. So you can imagine, it's quite literally like having a $200 million seller, $20 million seller, and you can imagine what that does to price. In 1 minute, it went from $8 down to a staggering $5.50, so about a 30% retracement in 1 minute. That's a big seller. And so you see these on momentum stocks that have ran for a series amount of days, because insiders cannot, or companies cannot literally sell shares to the open market in 1 day. They can't scrounge out their paperwork and throw, oh wow, we're up 200% today, let's do it today. It has to be multi-day runners, more than likely, unless they time it with some sort of catalyst, which you could get into some sticky trouble there. But TBLT went from $1 up to $5, and they're thinking, wow, our stock is way higher than what it should be. My book value, or the shares I own in the company, my private shares, are worth $3 a share. Now we're up to $9.35. Wow, we should, or I guess we probably did that a few days ago. We're up to $4 to $5. We should probably raise some money. It's a good opportunity. Our stock's popular. And so what happens is the company came out, they said it, and it tanked. We saw the exact same thing. Guess what stock we saw this on? It was a massive, massive sell-off. Can any of you guess? I'll give you about 10 seconds to throw in the ticker. It was a very inflated stock. This company was a sinking ship. They needed to plug the holes, more likely going bankrupt. Anyone guess? Throw in the premium chat. No guesses? So this was GME. Rab, there you go. Rab's right. So GME, correct, sir. And a lot of traders warned about this. In fact, I warned about this in our group when GME was hot. Everyone was like, man, we're going to the moon, which, yeah, I was for those traders. Obviously, I would like to see, retail traders win for their first. That would be great. But what ended up happening is the company saw it as such a good opportunity. While their stock was hot, let's put a secondary offering in. Let's sell some open shares to the market to raise capital for a company in case we go bankrupt and we have some capital, or we can reinvest it. So for the short term, what does that do? Plummets the price. Literally, you saw on TBLT it did this. But in the long term, it could be good for the company's success because they're raising capital to then reinvest, hopefully, back into the company. So if you're a long-term investor, might be a good idea to scoop up some shares. I don't like doing this because if you notice, all the stocks that are more likely doing the secondary offerings are the ones that are, blistered and battered down, 99+% to all-time lows, and they're just trying to, scrounge up some chump change on their company to plug the holes, if you will. So this is a risk with multi-day runners. This is why I only trade maximum the third day. I don't know the exact amount of days it takes between all offerings are different between actually putting in the offering, the size of the offering, and the price of the offering, and then coming out with paperwork and actually selling it to the open market. I can't tell you exactly how long it is. It's several days. That's why I only trade the first, second, and sometimes the third day of a multi-day runner, or I have a tight stop because this is very common. Literally in 1 minute, your account could have been down 30%. That is a staggering trade. It's a terrible trade. And that's just unlucky for traders. And this is kind of why I hate trading WSB stocks. This is very common because all the companies that WSB pumps up, Wall Street Bets, are all, they're trying to short squeeze. All these companies have terrible financials, are more likely going to be delisted, going bankrupt. They're trying to pump the stock up to squeeze shorts out and make money on. I get it. But this happens a lot. And this is why I don't like trading stocks that, run every other day and have a nice pop to the upside, like RDBX. I think RDBX even did an offering as well. This is very common with the WSB stocks. So that is the secondary offering. I could pull up the article if you guys would like when they announced it. Here it is. Can I actually pull up the link for how many shares it was at the price per share? So they sold $20 million worth. So you guys can do the math. Price exercise at a price of $5 a share. Up to 8 million shares, it looks like. But it was 4 million of shares of common stock, and then preferred investment options to purchase up to 8 million shares of common stock. Okay. Yep. So that makes sense. $5 a share, 4 million shares, $20 million. So what you see with these secondary offerings is usually where it's listed, the stock will go to. So if they price it at $3 a share, because that's what their book value is, then it'll more likely drop down to $3 a share and kind of level out. It's kind of like a price target. If it's a $100 stock and it's priced at $100 a share, depending on how many shares it is, you won't probably see as much of a correction. Obviously, if it's like an absurd amount of the company they're selling, but that obviously takes a lot longer to plan. But if it's an $8 stock at a time and they price it at $5 a share, well, that's what they think the company thinks the stock's worth. That's what retail traders are kind of going to think it's worth as well. So that wraps up secondary offerings, team. Is there any questions about secondary offerings? How do I trade them? What are they? Anything I can help with? Remember, now is your time, team. I wanted to go over the 5-minute pullback, but I felt like this was a much needed. I honestly thought PGY. So I am shocked PGY didn't do an offering yesterday. I got stuck in hog going down on PGY. And you see these stocks are like instant because it's literally instant selling of an absurd amount of shares. And it's hard. I don't think it shows up in the level 2, unfortunately. So I am shocked that there wasn't a headline several minutes after I was stuck in a hog going down that they had a secondary offering because the company went from $2 to $14. Actually, never mind. The company IPO not too long ago. I think it has to be after its lockout period. Every stock has a lockout period, meaning they cannot sell any insider shares from the time of the IPO. It's like 90 days, I think. So I believe this company still in its lockout period. So I'm not sure why that happened yesterday. But TBLT definitely had an offering. And this happened before news came out, because some people picked up on the news before it happened. And you got to think of all that selling pressure. Of course, the price is going to plummet. But hopefully I explained that well. It's simple economics. When you have supply and demand, and then you increase the supply and demand does not all of a sudden increase, on the intraday time frame, price is going to tank. But over the long run, the increased demand, if they reinvest in their company properly, make it better, make it more investors like to see it, then that's only going to help the long term. But like I said, most of these companies are just sinking ships. I know a trader who made well over 100,000 in like 5 minutes. I think it was like 300,000 shorting when the news of the offering came out for GME, because the price like tanked like 50%. He's the only short seller. I always struggle with his name. I'll send the clip to you guys. But if you guys can short and offering comes out, might be a good opportunity to. However, I would note, usually that happens. You see the candle well before you hear about the news. Let's see if I have a really good scanner. Alrighty, y'all. Is there any other questions? I only ran. Oh, we have a question. Rigo's got one. $3 million on the GME short. Yeah, I like watching him.
I was just gonna ask, whenever there's a secondary offering and the stock drops a lot, was there any chance it'd be like stuck in a halt going down?
Oh yeah, very common. I'm honestly shocked TBLT didn't trigger the halt going down. GME got halted going down off of their offering. I honestly have no idea how this stock didn't get halted going down. Interesting. But yep, good question.
Yeah.
So I now that I'm thinking about it, I don't think the stock can get halted going down off of the offering sell-off, but the added selling from the retail traders and investors could trigger a halt. I do believe. I could be wrong, because I don't think obviously the Nasdaq's going to force a stock into a halt from insider selling, because that's kind of manipulation, if you will, but to trigger that halt level. However, I think retail trading has to come in to back it up, which happens 9 times out of 10. PGY ripping. Oh man, I'll probably stay away. I'm gonna be glad if the profits are made on it, unless it really starts breaking out like $13, $14 level. But this is a risk, guys. If PGY didn't just IPO and have its first offering, I wouldn't be shocked if this came out and said that we're gonna have a public offering or a secondary offering. Any other questions before I head out, guys? Again, now is your time. You got about 10 minutes left before we'll wrap it up. Is there any other questions? Type it out in the premium chat, or come on stage. It could be questions about anything. It doesn't have to be about offering, but that's just kind of the. I would love to pull up the article. Why Ross only trade? So he doesn't only trade pre-market. He trades at market open, but he likes pre-market because think about the stocks that we trade. A lot of them rip. The majority of the move is pre-market, and if you could hop on the stock quickly, we saw this on DRCT. News came out at 8:30. I was at my desk at 8:30. And by 8:40, I was in, and I was one of the early birds to get in on it. Today, majority of my profits were from pre-market trading. In fact, almost all of them were from pre-market. So, you can see a trend here that pre-market trading was a lot of opportunity. There's also a lot of opportunity at market open. But because there's limited amount of trading available, and there's limited volume, in pre-market, a little bit of buy volume can send a stock soaring. Plus, a stock getting halted pre-market and post-market, there's way different rules. It's it's almost impossible. It's really hard. So stock's going to really open up pre-market. Oh my goodness. I'm going to stay away from PGY just to let you know. I see it. Just a quick one. Will you be joining your live 30 minutes before market open every day? I'm debating. I'd like to get here at like 9 or 8:45. There's several gyms there. I go to the gym in the morning. There's several gyms around me. I used to work out this one that opened up at 5, and I'd be there and I'd be at my desk by 7, so I catch majority of pre-market. And I like that a lot, but I found by market open, my brain was kind of fried and like I was so itching to trade. So I found what's best for me is to, be at the gym by 6:45, 7, and then be trading by 8:45, 9. And the gym's like a mile away from my office. So I'm thinking about it. Thinking about maybe changing my schedule a little bit. But I'm just kind of... I had 2,000 shares, but I got 250 and sold. Sell every time. Please advise. Sounds like you're not averaging out, my friend. Sounds like you're trying to get a little bit of profit and go. And if that's the case, think about the winning ratios. Are you selling at a loss the same place that you're selling at a profit? Because if that's true and you have a 50% win rate, your account's not going to see any gain. So if you learn to average out and sell a quarter here, sell 50% here, while keeping the same risk management, you're going to make so much more money. And if you're confident in the trade, maybe increase your price targets. You see me do this a lot. You see a lot of buy volume. Obviously, making money is great. I love making money. I love locking in profits. But like we saw on KOSS yesterday, I was up over $2,000 in KO. I did what I said I wasn't going to do, and I looked at the video of my KOSS trade I took yesterday, and I was up over $2,000 on it. And I averaged back into it when it broke out at 12.50 because I was looking for Grand Slam trade. If that broke 12.85 in 13, we would have saw 15 and I probably would have made $10,000, $15,000. But what happened? I pulled on back and I only made $400. So if you think about it, technically I lost $1,600 off the top, but if that broke out and I made an extra $8,000, would I rather just lose $1,600 less in profit or would I rather make an extra $8,000? Clearly making the extra $8,000 is ideal. So if I have more aggressive price targets and I have tighter stop losses, I'm going to average out. I'm going to have bigger gains. The reason I changed my strategy to this is because I saw a common occurrence. I saw that the only money I made were from my big winners. I tell you guys, if I'm above or below $500 on the day, I call it scratch, because those days cancel themselves out for me. So if I can buy all in, or if I could have a Grand Slam trade and be more, selective in my trades, be more aggressive in my price targets, those are the trades I'm going to make. I'm going to actually make my living off of. The little base hits I don't. Like I said, base hits cancel each other out, more likely. Ross trades at market open. He only live streams pre-market. A majority of his trades are probably pre-market, but he trades with his team like I do into market open, I believe. I could be wrong, but I'm pretty sure. I haven't had any conversation with that guy. How do you average out under PDT? Buy all in at once and then sell all out multiple times. So that's what I had to do with the small account challenge. I found that was the best way to do it. I would try to obviously nail my buy where I bought in. I'd try to be very consistent and not take super risky buys. And when I was really confident, I'd size up. So I would buy all in at once, and then I would slowly sell out because I think it's more important to average out than average in. If that makes sense. Market direction before market open. So we do the watch list, and we do have key, I guess, points taken puts in there, and then which is I think is a great place to look. But also if you go to the premium watch list, we wrote out a whole several page thing on the direction, what's going to change the direction, where we think it's headed, what might affect it, certain meetings that are coming up. I know a lot of you guys don't utilize the premium analysis, trade ideas, and watch list. But if you guys are going to use any of those three, please use our premium watch list. It comes out Sunday night, and it's just loaded with information about the market, and I think you'd be better equipped. Alrighty, guys, is there any more questions before I head off for the day? Got about a few more minutes. Excellent trading day. What a way to turn around the week. Went from down like 3K to up 10K. That's definitely a turnaround. I don't like those weeks. I was thinking this morning, I would rather have nice little base hits here and there and slowly build my account than big loss, big sell, or big loss, big win. Sell transactions, yeah. So ACastle, so this changed. This changed when I traded in college. PDT, if you had to buy all in at once and sell all out at once. It was so hard. But TOS and other platforms understood that. It's almost impossible to be profitable buying all in at once and selling all in at once. It's so hard. So what they did was they changed PDT rule a little bit. They changed it. This was new. I didn't know this till I did my small account challenge in December. So within the last year or so, I think they changed it. And all the students at the time said no, you can do that. And I was like, a lot of you guys are probably sitting in here were the ones telling me that. And I said, I think you're crazy. But then I found out that's true. You actually you can now either sell or buy all in at once and sell out multiple times, or buy in multiple times and sell all out at once. So it's the PDT rule did adjust a little bit, but you can't do both. You can't average in and average out because that'll be multiple trades. So I think it's more important to average out than average in. So I buy all in at once, sell out multiple times. I had to do that with several trades this week in this small account challenge I'm doing. But man, I cannot wait to boast the broker statements on this one. This account is just flying right now. Correct. Doesn't matter. So it is per platform. I know TOS and Moomoo have adjusted it. There are still platforms that ding you. So is there only a 2-time rule? I've sold out multiple times. There could be a 2-time rule. I could look at it. All platforms are so different, and I've traded off of multiple platforms. And to be quite honest with you, team, I haven't been below PDT in a long time, so I've been kind of disconnected with the laws and stuff like that. It could be. If someone wants to double check that, that'd be great. But I think on Moomoo you can sell out. You can talk to Trader Noah. He trades on Moomoo, and he could sell out as many times as he wanted, and then he switched to Lightspeed, and you can only sell out once. Lightspeed hasn't changed because a majority of the traders on Lightspeed are well above PDT. All right, team, that's going to do it for today's group lesson. Excellent questions.